Hi, it's Anthony from Bookkeeper 360. And on today's video, we have a pretty special one for you. On this video, we're gonna bring in Liz from our client services team, and she's gonna show you probably one of the most asked about things about bookkeeping and accounting, and that is the difference between cash versus accrual bookkeeping. Here at Bookkeeper 360, we do service both cash and accrual basis bookkeeping, so it's a pretty common topic that we do speak about here. If you're not subscribed to our channel already, be sure to subscribe so you don't miss any other content like this. So without further ado, take it away, Liz.
Today, we are going to explore Xero's demo company to better understand the differences in reporting for books kept on a cash basis and those on accrual. Here I have two income statements, one pulled on cash and another based on accrual. First, let's review July's income statement on cash. Clicking into the total sales number, we can see that this value is comprised of receivable payments. This means all lines shown here are being pulled into the financials based on the date the money was actually paid by customers and received, consistent with cash accounting. If we switch over to the accrual report, these transactions are all receivable invoices, meaning transactions here are shown and pulled based on invoices with a July date, regardless of when or if money was received. Reporting revenue based on when it's earned, consistent with accrual accounting. Now, let's take a look at specific transactions. This $5,663.62 is shown on both the cash and accrual income statements. So what's the difference? On cash, the amount is recorded on July 22nd. Even though this payment is associated with invoice 0020, it is shown as revenue based on the date it is received. By clicking View Details, we can see the bank statement line with, again, the July 22 date. On accrual, this same amount is recorded on July 11th. Consistent with the invoice date, which we are considering to be the date this revenue is earned. Down here, you can also see the actual payment date as July 22nd. For this particular transaction and example, both the payment date and invoice date are both in July. Let's review one that's not. Take this $18.26 on July 21st, shown on accrual but not on cash for the month of July. Clicking in, we understand this is being included on the accrual report because the invoice date is in July. Notice this particular invoice is still awaiting payment. Although no money has been exchanged, we are recognizing the revenue as being earned when the order of this book was placed and the invoice was raised. This $18.26 will not show on cash financials until the customer remits payment. These differences between when revenue funds are received versus earned account for the change in revenue between cash and accrual-based sales in the month of July. Just as the accounting basis affects revenue, it also has an effect on expenses in the same manner when bills are raised. Now you might be wondering, if I keep my books on an accrual basis, how do I keep track of what invoices have been paid and what is still open from viewing an income statement? This is where tracking your receivables and payables, which are housed on the balance sheet, become very important. Luckily, Xero has some great reports, such as this aged receivable summary, as well as the payables summary, to let business owners what invoices and bills are still outstanding and which have been paid.
Thanks for explaining that, Liz. It definitely makes things a little bit more simple to understand. If you guys do have any questions about the differences between cash versus accrual bookkeeping, be sure to drop a comment in the comment section below, and we can go ahead and answer those questions for you. I do hope you enjoyed watching this video and learning about how Bookkeeper 360 can make running your business just a little bit easier.